Right. Now, in this one, we're going to discuss what risk management should look like. So stay tuned for that. This morning, what we're really going to be touching on is risk management. Risk management. And this is really interesting because you see, people have the assumption that you could win all your trades. I say this all the time, you can't. No matter who you are, no matter how good you think you are, no matter how good you actually are, you will lose trades. You will. All right. I took a total of 4 trades last night. I'm going to be going over all of them. I lost 3 out of the 4. Full transparency, right? 3 out of 4 I lost. The average person, the average trader, will be like, damn, 3 out of 4, boy? 3 out of 4? Wow. I don't know what I'm doing. I don't know how to get this thing, how to fix this. I don't know. I don't know how to do this. How do people actually do this? Damn. But I here sit down thinking, well, no problem. There's no problem. Because when you see what I'm about to show you, if you know where I'm going with this, oh boy. And when you see, and if you understand where I'm going with this, you would understand why I'm so happy. I'm okay. You know why? Because there's more days in the year. There will be more opportunities. So let's go over the losses very quickly. And let me show you why I'm okay with losing 3 out of 4, which is that's basically a 25% win to loss ratio. I took 4 trades. 4 out of 4 would be, if you lost all, it would be 0% win to loss. If you won 2, lost 2, it would be 50% win to loss, right? That is easy math, simple, right? 25% win to loss ratio. Watch this. So the first trade that, and I called these last night, so if it is you took these with me, then unfortunately I apologize. Unfortunately I only called out your USD, right? No, CHF sorry. But if you took any of these and you lost, I hope that you did it how I do it. So watch. The first one, and I called this last night, was CHF right? Didn't do the drawing on it. Didn't do the drawing, but the rules were there. Bull momentum, possible reversal, ECR, Asian session, EMA respect, bear momentum, push, pullback, accumulation. More or less everything was there. It just so happened that the dealer, the person who really in control of the market, it wasn't my time. It really wasn't my time. It wasn't the time for the sells on this, apparently, allegedly. And you know something? That's just the way the cookie crumbles sometimes. You can't get away from that. You can't force it. You really cannot force it. Now, this is minus how much? For those of you who have been following me, for those of you who have been listening to me, right? How much pips would I have lost with this trade? That's correct, 10. 10 pips. There are people who believe that a bigger stop loss is the answer. There are people who believe you shouldn't trade a tight stop loss because that is one of the mistakes. That's a mistake as a trader. Don't trade a tight stop loss, right? Use a wider stop. You get to stay in trades longer. I absolutely agree. You do get to stay in trades longer, but your risk to reward is affected. And that's the problem. Your risk to reward is affected. It is actually significantly harder to have a positive risk to reward by using a bigger stop loss. Think about it, and I want you to really think about it. If you have a 50 pip stop loss, right? In order for you to get 1 to 2, you have every trade that you take, a 1 to 2 risk to reward, every trade that you take, that trade has to go 100 pips in your favor in order for you to just to get a 1 to 2 risk to reward ratio. Think about that. And this is really, that's frustrating, because what about the time in the market, the day like yesterday, when the market does not go 100 pips? It does not, no matter, doesn't, most of the pairs, they don't really move 100 pips. What do you do then? What do you do then? Can't really do anything. You have to wait. And what if the market, what if it doesn't go 100 pips in a few weeks and it ranges? What do you do then? What do you do then? So by no means am I saying, it is impossible to get a 100 pip take profit, What I am saying, to consistently get it every single day, if you are a day trader, if you trade daily, it is not very easy. Even for somebody who knows how the market would really, really operate on a daily basis. So what I am telling you is, the tighter the stop loss, the more aggressive your risk to reward. And you will see that at the end of, well, coming down to the end of this. So if you are new, I implore you, listen to what I say. Listen to what I say. So we lose this. So this is minus 10. So remember how much I lose, minus 10 on CHF-JPY. Didn't call it per se, but I did say Euro USD has potential to sell right here. So we did this one earlier in the week. This was the day before or yesterday going into this, the day before yesterday going into yesterday. And this was last night. And I said that I would have liked to see some accumulation on Euro USD, and I might consider. The accumulation that I was looking for would have been right in this general area here. Let me just move this. Right in this general area here. It didn't go so high. I actually caught it somewhere there. A little lower than I would have liked, right? A little lower than I would have liked. And it basically went against me because I entered here like that. It went against me 10 pips before giving me, let me see, before giving me about 20 right here. So it would have taken me out 15. It would have taken me out, but it would have given me 15. So I don't want to say that I was wrong, but I was wrong. Oh well, all right? So remember, that is 2 losses, all right? 2 losses, all right? No problem. So that is minus how much do I know? How much we lost so far? 2 losses. How many did I lose? 20. All right, cool. Let's keep going. NZD USD. I also said this had some potential last night, right? Right where I said it would accumulate. You have your bear momentum, trapping retail buys, right? Bear momentum, Asian session, push, pullback, accumulation, 10 pip stop loss, as you can see here. And this one actually gave me ultimately about 13 before coming back and taking me out. And then it dropped again, giving me about 16, give or take. But it took me out, minus how much? 10. So how much we down so far? 30. All right, cool. 3 trades, 30 pips. All right, no problem. But listen, by now you probably realize that 30 pips is 3 different trades I take. Yeah, here was here 3 different trades I take. That 30 pips for a normal trader most times is 1 trade and more. I also took Euro CHF, and I called this last night. I just shoot a little picture for my Instagram, and basically speaking, this is the only one I caught, and I'm still in this right now as we speak. Again, I said last night, if you have the push, the pullback, the accumulation, take your 10 pip stop loss, enter your sells. All right, I spoke about this last night. If you were there in my class last night, you would have heard me say this. Everything I say in this morning is everything I spoke about last night. This is just me trying to show transparency. This is what I think. This is what I thought. This is what happened. All right. Bear momentum, inducing buyers on this red line. Many buyers would have bought here. Long story short, push, pullback, accumulation, Asian session, EMA respect, all of the rules more or less there. And I entered here. It came against me about, give or take, about 8 pips. And then it dropped. Watch it. Right where I said, listen, I did not move this. Right where I said it would probably drop to, somewhere here. Right? It dropped a little thing again. Nothing too significant. It dropped about 20 pips. Watch it. Pause. If I was paying attention and I wanted to close it here, if I wanted to close it here, right at this low, doesn't that then mean that the 30 pips that I lost on the 3 other trades, right, I could have netted back 20 plus. You hear what I say? 20 plus on this one and leaving me net negative minus 10. Because I lose 3, 10 each, which is 30, but I could have closed this plus 20. 30 minus 20 is equal to 10. I'm keeping it open. I'm keeping it open because I feel like it could drop more. I'm going to trail it. Suppose you, most of you probably know by now that I don't like to close trades manually. Realistically speaking, if you close trades manually, you have more option or more ability to have regret, right? I'm going to keep it open. And my stop loss is in profit right now. My stop loss is, excuse me, somewhere around here. Is about maybe about 4 or 5 pips, and I'm gonna trail it slowly, right? Really slowly. But excuse me. The reality is, this is one trade that I won, and I'm not glorifying myself or praising myself on, hey, I win one and I only get 20. All I want to see the real magic of the way I trade. I want to see the real magic of the way I trade. Yesterday, right, or the day before into yesterday, there was 3 in particular that I called the night before and caught. And EU was one of them, not your entity. EU was one of them, right? Where I did this. If you go on my Instagram, you'll see where I did this analysis Sunday night, took the trade Sunday night after I did this analysis, and then woke up with it. It went about 50 pips in my favor, but it took me out at like +9. That's fine. That's not the problem, right? +9. But it went 50 pips in my favor when I originally thought it was going to go 30. It went 50. If I decided to close it at that 50, think about what I'm telling you. I am net positive 50 on Euro USD. Doesn't that then mean the 30 that I lost today, I'll still be positive 20? Yes or no? I'll still be positive 20 on overall, right, for the week. It gets better. As I said, there were 3 in particular on Sunday night that I called, right? GU, no, I'll leave GU for last. Euro GBP was the next one. Well, watch it. Look at the size of the stop loss. Look at the size of the take profit. If you go on my Instagram, you'll see I was in this trade. I was in this trade. And this trade did not go 10 pips or 20 pips or 30 pips in my favor. This trade went 110 pips in my favor, right? And I closed it manually because of, a situation yesterday, where we had no internet for a little while. We thought that we would not have had internet for a few days. I was forced to close it because I wanted to be able to secure what's already on the table. Remember, a bird in the hand is not worth 2 in the bush. In other words, I'm not thinking for what birds that have in the bush. I know what I have in my hand now, and I don't know if I'll be able to secure it. I close it manually. I don't usually do that, but I close it manually, right? So I close it manually at about +80. So I close, you took me out in profit about 9 pips. Euro GBP, I close manually at about 80. So that is 89, right? 89. And I'm floating right now about, I think on Euro CHF, I'm floating about, what is that? About 20, let's say about 10 on Euro CHF, but it gets better. So all right, so that's basically 109, about 100 pips total, and minus 30 that I lost, which was today. And for the week thus far, I am still net positive 70. And we didn't talk about GBP USD yet. GBP USD was the holy, well, I ain't gonna say the holy grail, but it was the one, right, that really gave me something. And again, same rules applied. Same reason I sold EU is the same reason I sold GU, right? Where you have your bull trend, the retail traders trapped in buys, dealer went up, created the high, came back, stop onto the high, sold off, reversed the market, ECR, which is my signature setup, bear momentum, push, pull back accumulation, sold it. 10 pips stop loss, absolutely safe. This did not go 10 or 20 or 30 pips in my favor. GU went 200 pips in my favor. 200. You hear what I say? 200. Not 100, 200. And if I really wanted, somewhere down here I could have closed it. but y'all know y'all know how I trade. Y'all know that I trail it. Again, I was forced to close it manually. I closed it manually at plus 120. So we have 100 floating on, well, not floating, we had 100 closed on Euro GBP, EU yesterday, and Euro CHF floating today, right? Total. And then we have another 120 closed on GBP USD. Doesn't that then equate to the week to about 220 pips thus far? Yes or no? Anybody disagrees with that? Is my maths making sense, or does anybody disagree with that? Come on, if all you disagree, tell me, no challenge me. All right, cool. And then the nonsense happened. The nonsense happened. So I come last night and I take EU, it stopped me out minus 10. So 220 minus 10, that's 210. I come and take NZD USD last night, it stopped me out minus 10. So that's 210 minus 10, that's 200. I come and I take CHF JPY and that stopped me out 2 minus 10. That's 200 minus 10, that's 190. For the week, I am still up. I am still up 190 pips. Plus, not minus, plus. And I had 3 losses in a row last night. Can you do that with your wide 50 pip stop loss or your 100 pip stop loss? Probably not. Probably not. Not in this time frame, I can tell you that. In order for you to yield results like this, it has to be over a few months. And let's be real, the vast majority of us traders, we aren't very patient. Let's be real, let's be honest. We aren't patient. We live in a world, we live in a society today that everything is instant gratification. So you want results now. That's what everybody wants. Let's be real. Don't deny it. Don't try to hide it. You want results now, right? I'm up 190 for the week, and I still have Euro CHF open. And if it take me out, well, it taking me out at about, what's that, plus 8. So that's fine. That's fine. The reality is, and this is really important, the reality is, this is, if you want to know the secret, people always asking, bro, where's the secret? Where's the secret? You want to know the secret? The magic is in the numbers. Women lie, men lie, the numbers don't lie. The numbers don't lie. If you understand what I'm showing you here, this is the answer. Even when I am wrong, I'm still right. Even, you know what I say? Even when I am wrong, I am still right. And the reason why that is important is because your goal as a trader, right? Your goal as a trader should be to minimize the loss and maximize the gain, right? We're in the business of taking 10 steps forward and only 1 back. Some traders out here taking 10 steps backward and 2 forward. And then they'll take 50 steps backward again and then 1 forward. Why? Why are you doing it? You have this wide stop loss, which let's be real, you're probably taking some messed up trades, right? You're taking some trades that really ain't making no sense, right? And they're going to stop you out. And then as soon as the trade goes 20 pips in your favor, you're not patient enough, because again, instant gratification, you're not patient enough to hold it to go in the direction that you think it would go. Let's be real. You have a 50 pip stop loss and it stops you out 5 times in a row. You get 1 trade and it goes 30 pips in your favor. You're closing it. Be honest with me. Deny or agree? Let's be real. You've been having a really bad week. A really, really bad week. Maybe a bad month, right? And you as a trader, you have 50 pip stop loss on every single trade that you take, right? And you enter the trade and you lose. You enter the next trade, 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 you lose. And you lose 5 trades in a row. You are down 250 pips for the week. And 1 trade goes 30, 40 pips in your favor. And it starts to pull back. So the 1 trade that you caught, actually, you caught it, you wanted it to buy, and it started to do that, and it started to pull back. You know, as it started to pull back, you know what you do? You say, oh God, oh God, oh God, oh God, oh God. Oh gosh, let me close it here. Yes, you close it here. Because instant gratification, you're afraid of it coming back and coming back to stop you out at a minus 50 again. So you take your 40 pips and you're still down 210 pips over 6 trades. That's madness. That is absolute madness. Now, I know people gonna come for me, either in the recording or in the anything. What about swing traders? Swing traders do that all the time. I agree. I absolutely agree. Swing traders do this all the time, right? Where they would have really wide stop losses because they want moves over, a long period of time. Absolutely. I absolutely agree. Those are people who have patience. Again, I made a statement. Let us agree about something. The vast majority of us listening to this are traders who want results now. Let's be real. Don't try to hide it. You could lie to me all you want. You're lying to yourself. And let me ask you this. If you had the choice to make the kind of money that you want to make now or later by doing the same work, be honest with me. Wouldn't you like the results now? The reality is the vast majority of traders are not very patient people. The whole reality of why you became a trader in the first because you wanted money. You wanted money now. Let's be real. You wanted money now. You came into trading because you probably thought that, Forex is a get out of jail free card. You understand? Easy money. You see your friend doing it, he making money, post a screenshot making money. You understand? He never share the losses, but he make it seem like it easy. So you say, hey, I could do that. I go in and do that, man. And you do it too. And you know something, you realize that it is very hard. I made a post on Instagram about this as well. That, this is the emotional cycle of change, right? Where you're thinking that, is an uneducated optimism. You don't know how hard it really is, but you're happy, you're excited about it. So you say, you know what? Yeah, my friend doing that look easy, I could do it too. Because that go, he's make easy money. So you come in and you try to do it, and you feel like it's going to be easy money. It's not. It requires work. And there will be losses. You can't get away from that. And if you think otherwise, well, boy, you have a very rude awakening coming. If you're new to trading and you don't know that there will be very harsh losses, very harsh lessons taught, I'm telling you, you're in trouble. You're in a lot of trouble. So the reality is, and as I said, right, your goal is not, is not to have the widest stop loss. Listen, I prefer to be stopped out more times than I actually win. Because even with a 25% win to loss ratio, if your CHF, like I'll use this as an example, it's coming back against me now, it might stop me out. What if it doesn't and it drops another 50 pips? The 30 that I would have lost last night, overnight, while I was sleeping, by the way, the 50 that I would have lost, if this drops another 80 pips, give or take, the 30, give me 50 that I lost, the 30 that I lost, right, and this drops 80 now, right now, wouldn't that then mean that I'll be net positive for the day? 50 pips? Just for the day. I ain't talking about the ones that I had at the start of the week. Just for the day, with a 25% win to loss ratio, meaning I win 1 out of 4 trades. I've won 1 out of 4 trades, but that one trade make up for all the losses. That is the answer. You want to know the secret? That is the secret. And if you realize it's not really a secret, it really isn't. Risk to reward. Minimize the risk, maximize the reward. Anybody disagree with that? Does it not make sense to anybody? Does anybody feel like, something missing from here? What do you think about this? Let me know. Comment about it. What do you think? What do you think? Tell me. Nobody say nothing. You calculate lot size based on account size. Yes and no. I calculate lot size based on risk percentage, right? Risk percentage, meaning depending on what I'm trying to risk, it could be 1, it could be 2, it could be 5, it depends. But I'm calculating my lot size based on the risk percentage, right? William asks, why do you use a trailing stop? Because any trader out here, listen, I'm putting my head on a block. Any trader out here who tell you he know exactly where the market going is delusional. I have a post on Instagram to make with that too. We cannot know where the market is going. We cannot know exactly where or how far it is going to go. And I am aware of this. I know that I cannot capture all of the move. I know that. You understand? I know that I can't capture 100% of the move. But I know that I could capture most of it by trailing it. That is the reality. You understand? I know that if it goes 200 pips, I'm very likely, just like on GU, it's very, very likely that I would not have been able to capture 100% of that drop. I know that. I'm well aware of that. I would not have been able to capture all of this, and that's fine. But by trailing it, I am capturing as much of it as I can. And that's just reality. And I'll tell you, it has been working 9 times out of 10. When the trade really go and it drop like this, if you trail it aggressively enough, if you trail it how it's supposed to be trailed, and I do classes on this, if you trail it how it's supposed to be traded, right, trail, what I'm telling you, even if you don't capture 100% of the move, usually you end up leaving with at least 50, 60% of the entire drop or climb. And that 9 times out of 10 is actually way better than closing it manually, because I'll ask you the question, and this is for anybody listening. How many times have you closed the trade manually? It dropped, let me say it dropped 50 pips. You enter a trade for sells, it dropped 50 pips. And you say, oh, cool, yes, this is it here. And you close it at 50 pips. It pull back at a little 15 pips and it drop another 300. How upset are you in that moment? How frustrated are you in that moment? Just salty. You are upset. You know why? Because it's like, wow, I closed it at 50 and it dropped 300. And listen, don't tell me that it hasn't happened to you before, because it has. It has. Right? I've been doing this a long time, man. It has. That's happened to me. And that's why I actually did this. Listen, somebody said, and I seen Muhammad says, it happened to him yesterday. Don't do it. Don't do it. We know that we can't capture all of the move. Aim to capture as much of it as you can. That's it. You understand? It's like those game shows on I think Ellen DeGeneres does this. You know, where she have the game where you go in the little box, and it's like a fan underneath the box. You standing up in this box, right? You standing, it have a fan right underneath here. Right? There's my little fan here, right? And you standing up in this box, right? And you have on a suit, or you have to grab. You have to grab the money. The fan blowing all the money, and you have to grab as much as possible. Listen, you know that you can't grab all the money. So by trying to grab all, listen, you're doing yourself an injustice. Just grab as much as possible. That's it. That is the answer. That is the answer. Long story short, if you can grab as much of the money as possible, you'll be better off as opposed to trying to grab all. That's it. Right? That's it. If you understand that, that is the real secret. Right? How do you trade and stop zone by zone or by percent? Neither. None of those things. What I do when I'm trailing is I am using a system that I'll give you an example that I used on a student yesterday. Does anybody know what a convoy is? A convoy. A convoy. People asking how many pips trailing stop. There's no answer to that. Do you know, William, do you know what a convoy is? A convoy in the army, of a group of vehicles driving to go to a specific destination, traveling in a group, right? I don't know if you know where I'm going with this analogy, but I'll tell you something. A convoy slows down, right, to match the speed of its slowest vehicle. Why? Because if all of the other vehicles can drive faster than this slowest vehicle, what will happen? They will leave the vehicle and go, and leave that last vehicle, that slowest vehicle, vulnerable. Similarly, you need to trail your stop loss with the same concept. If the trade is moving slow, you trail your stop loss slow. If your trade is moving fast, you trail your stop loss fast. That's it. You match the speed of the trade. You match the inertia and the momentum of the trade. And if you don't, a lot of the time, you're either going to be stopped ultimately, the trade is going to take you out ultimately, or listen to this, you're going to leave the trade and go. Leave all these slow vehicles and go, and that's the problem. That's why people get stopped up, because they believe a stop loss, a trailing stop, supposed to be a certain amount of pips. You understand? Or a certain amount of percent. That's not how it goes. In other words, you are saying that as soon as the trade goes this amount of pips, that's how much I need to trail my stop loss. And that's why you stopped out early. That's why I am allowed to stay in trade so long. You understand? If you've been following me for a while, you'd know that my trade on gold earlier this year, listen, I trailed it to 1,300 pips, 120, no, 1,230 pips, sorry. And it went 1,600 pips. I didn't capture the whole move, but let's be real. 1,230 pips is better than being stopped out early. Let's be real. Let's be honest. Right? Let's be completely honest about that. I am just matching the speed of the slowest vehicle. The slowest vehicle in this case would be gold. And whatever speed it's moving, I'm matching the speed of my trading stop loss to that. That's it. Keep it simple. I spoke about this to a student yesterday that, a lot of the time, the best solutions to a problem is the simplest, All I ever realized that the way I do things is really simple, Listen, a monkey could learn what I do. And I'm dead serious. I genuinely believe those smart monkeys that they sent to space and in the rockets at NASA or whatever, I genuinely believe I could teach one of those monkeys to trade, how I trade. I genuinely believe that. Because it's easy. That is not the hard part. The hard part is the psychological part. How to control emotions, how to not FOMO. You understand? All of these different things. And listen, I could talk for days on psychological issues that we face as traders. Days. Right? I could talk for days about that. That is the hard part. Right? Correct. Keep it stupid simple. One more thing before I answer that question. It might be simple, but it's not easy. And if you know the difference, there's a very distinct difference between simple and easy. They are vastly different concepts. The concept is simple, but it's not easy, right? In other words, it's simple to understand, but it's not easy to actually execute. That's something that a lot of people don't understand. So they'll say, well, that is it? That is all you just do? Yes, that's all I do. But that looking real easy? No, brother, it's simple. It's not easy. It takes a lot of practice to be able to do it in rapid succession. Consistency is the name of the game, but it is simple. It's not easy to do, but it's simple to understand. Right? Anybody disagree with that? Adam asks, I was curious on your take on twin positions because I see a lot of people talking about them. Do twins make your risk management harder, or is it unnecessary to take twins? That depends on who you are as a person. But I'll tell you, personally, I don't take twins. Reason being is more to manage. Ask yourself the question that you're asking me. Would you rather have one child? Let me be real. One child or two or twins? Think about it. One child is one birthday, one school subscription, one set of clothes, right? Everything. But you have twins, everything is doubled. Everything is doubled. You have 2 birthdays, 2 set of gifts, 2 set of school payments, everything is doubled. And I'm not saying, by no means am I saying, twins is a bad thing. I'm just saying people who have twins oftentimes are way, or have it way harder because everything is doubled, right? That's correct, another analogy. But think about it, right? Personally, I don't open twin lots or twin positions or whatever because it's more to manage, right? Simple, keep it simple. That's it. Any questions before I close off? I'm not doing no analysis this morning. It's New York. I'm not really looking for no. Oh, wait. UCAD. Maybe some potential to reverse, but definitely leave it for now. Right? I would say I'm not sure about it yet, but leave it. Right? And user, all right. Well, I remember speaking about this last night. User basically was trapping buyers, and well, look, basically dealt with that. UJ, well, people is catch my boy, right? UJ, nothing about UJ. How do you trail stop loss? Chris, I just answered the question. I'm not going to answer it again. Goal as XAU, goal. All right. Goal, nothing on goal. I said this. I said to leave it alone last night. I'm going to say leave it alone again. It's probably inducing sells. I don't trust that. All right. Bitcoin, we'll leave Bitcoin. Bitcoin has to induce sellers before you could buy. He's probably starting to induce the sellers now. He might sell really hard and then create some buys in the market, but definitely leave it alone for now. And GA, God, everybody just catching me today, boy. GA, Chris, I said I'm not answering that question because I literally just answered it at the start of this class. All right, GA, leave it alone, nothing on GA. Euro JPY. Listen, we in the New York session. If you're not seeing a reversal, you shouldn't be trading anything. Long story short. This session is known for reversals. If you're not seeing price at a high or low, if you're trading anything, if you're trying to enter anything, you're asking for trouble. Long story short. Euro JPY, nothing. CHF JPY, this took me out last night. Maybe potential for reversal, but I'll definitely say leave it alone for now. Let it come back up to this high and stop on this high before trying to drop, but we'll leave it alone for now. NASDAQ, that's US second. I don't think I have that, you know. NASDAQ, let me put that here. NASDAQ. NAS 100. Nothing on this. Nothing on this. We'll leave that alone. And NZD JPY. This is the last one. I'm not doing no more. All right. Well, they're tired. I'm not wake up and I'm tired. All right. Inducing buys. All right. So we'll monitor this in this area here. We'll keep monitoring that. I believe that the dealer is inducing buys. So we'll monitor this. If we see our rules to sell, we will sell. If we don't, we leave it alone. I definitely won't try to buy it here because if anybody buying here, you're buying because of support. Definitely leave it alone. If there are no more questions, guys, I think I'm going to close off this. Excuse me. I'm going to close off this this session, right? Matthias, you can message me on Telegram. You know where to find me at Ikata Trading. That doesn't change. It has been Ikata Trading for quite some time now. Right? I'll type in there at Ikata Trading. And yeah, guys, have a great one. All right. Remember, I'm actually gonna post this to my Instagram. I'm gonna do like a IGTV kind of thing. Post it to my Instagram. Showcase. Listen, transparency. I'm showing already lost. I'm showing you all that I've lost. But again, I also show you that hey, even when I lose, I still win. I don't care. I don't care if yours. I think your CHF is the only thing. I wonder if it's still open, boy. I wonder. Let me see. Yep. I'd still be in the street. So it's dropping again. If it drops 50 pips, boom, I am back in profit for the day. And I don't care. And I don't care. That's the reality. That is the answer. That's the secret. Guys, have a great one. My next session will be 7 p.m. Atlantic Standard Time tonight. That does not change unless I say otherwise. Have a great day. Have a peaceful week. Have a safe trading week. Other than that, guys, enjoy your day.